Okay, so welcome to this intraday strategy webinar on SB Trade Desk, guys. Mike Boutros here. Good to be with you this morning. We did just get the data release for housing starts and building permits from the United States. A little bit of mixed data print here. You saw housing starts beat with a 4.4% read for the month of December. We did get a downward revision to the previous month, however, on housing starts. Building permits, a miss, and an upward revision. So certainly a mixed data print here. You saw dollar yen spike up pretty quick, but we're pretty much unchanged post that read. Next major event risk for the session, guys, comes in right around 10 o'clock. You get the Bank of Canada interest rate decision. Okay, so with that out of the way, I want to take a quick couple of minutes, guys. We'll go through the setups that we've been involved in from a scalp standpoint. Obviously, the most recent one is going to be the dollar yen. Eileen, good morning. Great to see you. Petro, Mark Lavender, good morning to you as well. Petro says, great timing for that intraday update yesterday. I was holding dollar yen short. Right on, Petro. I'm glad you were able to squeeze something out of that. Eileen as well says, thanks for the heads up on dollar yen. Got a few pips and a few in sterling yen too. Sterling yen is actually a very interesting one, Eileen. Actually, me and Jamie were talking for a while about that one, so we'll take definitely a look on that. So, dollar yen. The primary focus, as we covered in yesterday's scalp webinar, guys, was that circular region right here, right above 118.95 to try to press the short. Now, the entry came on a really near-term chart. I'll show you all the metrics on this one, guys, because it panned out pretty well. We're actually still holding 1/3 left of that trade position. I tried to keep you updated yesterday, guys, on the Squawk feed as far as what I was doing with this one. I really wouldn't consider this per se a scalp. It's been in play for quite some time, but it's a slow burner, and when the market's a little bit more of a drifter like this one, you kind of got to wait for it. So here is what the intraday chart looks like on dollar yen. And again, here's what the report from last night looked like, or the update rather. So this region right here, 118.82 into 118.95 that you saw on the daily chart, represented a very clean confluence. For those of you who have been with me from daily FX days, these are my favorite setups: 100 off the low, a 618 off the high, or vice versa. And these confluences can be very, very useful. So certainly we did see that heading into the close of U.S. trade yesterday. I actually did jump into this position right at the close, essentially, and we kind of held it through this little drifter period. Didn't get much out of it. Initial targets were right down here at 118.09 into 118.04. Secondary targets, which I noted yesterday on SB Squawk, was 117.65, right smack in the middle of this support range right here. And the final or next scalp target to the downside is actually right down here at 117, or just ahead of. So you had a trigger break on that momentum, followed by divergence. Again, your textbook triggers, right? And that got us the conviction to hold here through this pullback. So as I noted yesterday, guys, when we took the position, as soon as we booked that first profit at 118.07, I think it executed. At that point, we brought our stops to 118.45. I got someone asking me, what's 118.45? 118.45 for me is a couple of things. It's going to be it would necessitate a break back above this median line parallel. This is actually a basic trendline support from the yearly high so far for 2015. The confluence of that comes in at 118.30. 118.45, here's the 5-minute chart, actually represents that last swing high that we made before we broke down. So we just put our stop right above this region. Okay, this is after we booked the first limit. Now as the market continues to move down, I also put out a tweet when I took this one off. The momentum signature had changed. What was different about the momentum signature wasn't as evident on the 5-minute chart as much as it was on the 1-minute chart. And this is what I tweeted yesterday on SB Squawk. Basically, you're looking at this. Okay, so the momentum divergence, as price action pushed new low, new low, new low, new low, higher low, higher low, higher low. And then this was the first 50 break we've seen, since the rejection and the BOJ decline. So right off the bat, as this thing was making some divergence and holding 40 specifically on the pullback, we went ahead and we booked another third of the position. So it's good to be dynamic. Take the timing, jump in, see what intraday momentum looks like, see what the real near-term momentum is like, and take a step back. So at this point, well, while I'm sitting here talking to you, it actually starts to recover. So I think on this point, we're going to go ahead and try to see what the U.S. Open looks like. Whoops, where'd the chart go? And if the U.S. Open, or let me take a step back, guys. At this point, the stop has been brought down even more. So once we cleared and took off this second limit, the break below on the intraday chart has the limits right now just above the 118 level. Okay, and why again 118? You're basically looking for the session highs for Europe and that swing low that you made on the ascent here earlier in the week. So it panned out pretty well. It panned out really well. We're floating 140 some stop pips at this point. Not per se a scalp, right? But a trade that the entry was so well suited that as you go through the scalp targets, all you want to do is kind of be chipping away at those levels. All right. So again, here you're putting in some divergence into the lows. Take a high in price. Take the trigger off high in price. It's not the strongest trigger, I must say. But nonetheless, topside break here, specifically a follow through on 40. And you want to abandon the short side near term, looking for re-entry again somewhere near the range of 118. Any questions on yesterday's dollar-yen scalp, guys? Okay. Moving right along. So we'll continue to see that one again. 117, 117.20s, initial downside targets here. We'll look for that. And the bearish invalidation level, guys, like I said, at this point gets dropped down to 118. So as long as we hold sub 118, going to favor selling rallies in dollar-yen. Next up on the docket was the Aussie dollar. A lackluster trade. I noted that we haven't really been very active in this one. It's struggling. It's struggling to make any type of ascertainable move. This is what the daily looks like. And if you guys recall, this is the trend line that we ran into last week, which capped the advance. We even got a decent pullback off that. I still think we could try to make a push through, but I really can't do anything on this, guys, until we see another push and close above the 82.12, 82.13 region right here. So I'm not really keen on the Aussie at this point. I do think if you get a decent rally here, you look to sell it as long as that holds. But long story short, this is kind of the formation that we've been in. It has been a snoozer. We haven't really done anything this week on the Aussie dollar setup, but the levels remain the same as they were on that report from last week. So we don't really have much to say on this one. The only thing I did want to note is that the momentum signature, and this is something that we talked about yesterday, still, it won't turn bearish. Even though you got this little spill here on the opening range for the week, by the way, is very well defined at this point. 2 tags of resistance, 2 tags of support. But the momentum signature still looks rather constructive. Okay, 60 break here overnight, 40 rebound. So play around range-bound conditions. If you're hellbound and trading the Aussie, I would be looking just for a break of this week's opening range. To be honest with you guys, it's only 19 pip ATR for a quarter of the daily. Doesn't really have me too excited, per se, for the Aussie. I'd rather see if this consolidation break to get the definitive move on the next leg here. So I don't want to spend too much time on that. The basic levels that we're looking at is this pitchfork or lower median line parallel, and the basic support trend line off the lows for the year. And this is sort of the invalidation level near term for the bull side. So we'll see if we can't get some push and play here on the Aussie dollar. Any questions on that setup? All right. Next on the list was, obviously, the Sterling CAD. So, a trade, again, that we've been talking about, the 183 level, okay, and how that level was a really big level in price. As long as price stayed below that, you're looking for that sort of recovery pullback. Well, the invalidation level gave out. The invalidation level, if you recall from earlier in the week, was the opening range high, which came in at 81.80. And certainly as soon as 81.80 gave out, you know, you're out of the short exposure. At the end of the day, the near-term construct has remained bullish, okay? But it's just the daily chart that had us looking lower on this one. So here's what the sterling CAD looked like on the daily. You know, the major region of resistance was right here, 82.60 into the 83 handle. You had a lot stacked up there, including the December high day close, 786 retracement from the decline off of last year's August high. There was a lot there. Basic trendline resistance. This dates back to the highs that you made last year, right? So we spiked right into it. And again, you're looking for a possible exhaustion here. The thing I wanted to highlight on this specifically, guys, is the 40 or the 60, hold here in momentum, suggesting that you can't really be expecting sort of the breakout trade here to continue higher near term. So while we were looking for an exhaustion high below 83, we blew right through that, guys, almost tagged 84. I still do think near term, you know, the correction play to the downside may be what you want to be focused on. A nice wide range scalp, guys, looking at 148 pips. By the way, yesterday's singular day range was the largest that we've seen in the sterling CAD since August 2011 was the last time that we saw an ATR or a daily range that big. What you're seeing down here, guys, is just a single day ATR, and that allows you to see what the singular day range was. So if you bring this ATR up, you put it on 1 day, you scroll all the way back and see the last time that we saw ATR at this level, you look and it was right back here, okay? And on that rally, you saw the push higher immediately get paired over the next few days, and then we pushed into a fresh high, okay? Might be the case here. But you want to use these types of studies to set an expectation, or at least give you an indication of what we've seen price action do post these type of massive ranges, okay? And while I do think near term you want to play the correction, inevitably we would be looking to buy that pullback. So here's what the intraday chart looks like for sterling CAD. The levels have actually continued to play pretty well. So you saw that break. Again, the invalidation level was the opening range high. That puts you bullish. It was accompanied with a break already into overbought condition. For those of you who are trying to possibly fade this, or if you're asking yourself if I took a short off this level, absolutely not. You know, I'm one, guys, who will very rarely, ever really, try to take a short scalp while momentum intraday is in overbought condition. This is not when you want to start shorting, okay? Yes, in this particular scenario, sure, you probably would have gotten a great entry with a limit right down there, right? But I got no triggers here, okay? And at the end of the day, the only trigger I would have used here as an operative trigger was actually this one, and the break sub 70. You know, on a scenario like this, 83.30, looking for a move back into the 83 handle would have been the play. The stop at that point would have had to been stretched way beyond our risk-to-reward ratio. But in general, taking the shorts while this thing's in overbought condition is something you'll never see me do. Vice versa on the oversold. In fact, it's the break sub 40 that gets you the signal. It's the break above 30 that gives you the signal. So a quick note there. On the whole here, as long as we stay, you know, 84, guys, is not just a random level. It's the highs that we made for December. Okay, so I'm hard-pressed here on sterling CAD. I do think you travel a little bit lower near term. I think as you come into this former median line here, you look to rebuy that for a push higher. I was pointing at the wrong median line. And in fact, a basic retracement off the low here. Okay, these are the regions of support at which I would start to looking for a re-entry in the long side if you get the trigger. All right, looking for about 37 pips per scalp on this one. Questions on the sterling CAD. Still might see a little bit of a pullback here, but again, remember the opening range broke to the upside. Long stay above 81.55. This is what we'll reserve as our bullish invalidation level. And on the daily chart, just watch that. Watch this region. It's really, really huge. If we get through this, you're basically looking at the August highs. Okay, and the high day close comes just ahead of that, right around 85. Another 100 pip run to the upside. So we'll be watching sterling CAD here. All right, next was the gold trade. Well, listen, this thing, every time we highlight area of resistance, kind of just blows through it. If you've been trading this one, I'm very cautious still on the long side. I said this yesterday, and we even highlighted here in the webinar, guys. If you recall, the fact that, listen, we could see this stretch and go for a tag of, the upper line median parallel, but very hard to warrant any type of action in this range. I still do think below this median line parallel, you are at risk for a pullback. Momentum is still, sub 70. You could see a pull into 70, then a pullback here to offer some entries, but right now I'm flat, looking for a re-entry on the long side. 1280 is an area of which you'd start to really look for possible longs. Our bullish invalidation level at this point brought up to 1262, 1268, this region right here. All right. Really impressive for gold. Now testing near-term resistance. Topside break above this, you're looking for 1321. Okay. I do believe that's right ahead of the 88.6 retracement. Yep, 1320, 1321. Near-term support, 1280. Bullish invalidation, 1268, 1262. And that, my friends, is the gold trade. So those are the four setups that we've been following since the start of the week. I also did put a piece out yesterday on Aussie Cad, and I wanted to go through that with you guys real quick as well. The accompanying video pretty much summed up exactly what I'm looking to do with this. I'm not really sure it wasn't primed for actual trade yesterday, but we're looking for an exhaustion high to sell in general for the Aussie Cad. And that's based on a couple of different key near-term metrics that suggest, you could see this thing show us a little bit of a correction. 618 retracement right off the high. Okay, comes out right at, 99.12? 99.27 or 28 was, there it is. Lost my train of thought for a second. Sorry about that, guys. 99.28 is a long-standing 236 retracement from the dance off the 2008 low. So you're probably thinking to yourself, Mike, at this point, both reference points are like 3 years from where we are right now. Wouldn't it be more prudent to use this retracement or maybe an extension? We do have those, but the reason I leave this 236 on here, not necessarily because the 236 is such a critical level, but because of what price action has done there in history as well. So it doesn't really matter, guys, whether it's a 618, a 236, a 786. At the end of the day, what I want to focus on is I want to go back and see what price has done there. And if we've seen some clear pivots, if we've seen some areas of rejection, then it's a level I want to keep my eye on. And the 236 at 99.27 is just that. Just pips shy of the 2009 high. Okay? Just pips shy, or actually right on, the 2012 low. Okay, so right off the bat, you have a yearly high, you have a yearly low. A pivot last year falls just above that region as well, about 10 pips off. Okay, and it's now the 618 of the near-term decline. So all those things stacked up have me looking lower against this 99.28 region. So we kind of pushed through that an overnight trade. I was looking for a trigger. Unfortunately, I didn't get a chance to jump on it, but I do think it pans out, and you do see a little bit of a kickback. It's a heavily skewed trade to the upside, guys, and the momentum signature here has broken above 60 for the first time since back here. Okay, and you can see what happened in that rally back in March of last year. So again, using price as sort of an indicator, a break above 60 from oversold. So again, after you hit oversold condition, this is the first break above 60. The last time we saw that was right here. Coming from oversold condition into a 60 breach, it was right slap in the middle of the rally, and you saw a push higher. Okay, so if anything, like I said in the accompanying video, we would be looking to treat this just as a correction near term, with that pullback likely to offer some nice entries on the long side for Aussie Cad. Here's what the scalp looks like so far. So I put this in the I think I tweeted this last night. In any event, guys, what I want to say is this. You see, this trigger here is the only trigger that I saw. Why was this a non-operative trigger? I always wanted to point that out because I'm sure a lot of people were looking at this. This was an inoperable trigger because price was not at a resistance level, right? So this would have been a great trigger had it happened right here, where price is testing a major key resistance. 99.28 is the bearish invalidation level, so you know what you're trading against. You have some momentum into the highs. That would have been a trigger I would have loved to take, but it just wasn't there. Okay? These triggers in and of themselves mean absolutely nothing, guys. If price action is not confirming what you're seeing in momentum, then it means nothing. So this was an inoperable trigger. We were waiting for the entry. You got up here. I didn't really see much, ahead of bedtime here in New York. I didn't really see much that I could jump into. A reassessment of this type of move would have been probably the better judgment. Especially on the back of these two divergent points, price, higher high, oscillator, lower or even equal highs. I just want to note that, guys. If price is pushing into a new high, higher high, higher high, and the oscillator even holds equal highs, that is also divergence. Okay? Divergence, all you're looking for is that the oscillator is not confirming an extreme in price, whether it's a new high or a new low. So this was some divergence followed by the trigger break. That would have been your entry. You're only looking for about 22 pips per scalp on this one, guys. It's still pretty tight, but I'm looking for a little bit more signs of exhaustion turnover here. Looking for a pullback. Initial target's 98.60, and then right into the 98 handle, 98.15. This is the formation that we're trading within. So wouldn't put it past this thing to go for a spike into 99.50. And if I find a short trigger up there, specifically on divergence, I'd love to take it. But broadly speaking, if we close above 99.28, I'm not really looking to take the shorts here any longer. So some food for thought there. I'm not really sure it's primed for trade. Do keep on mind as you head into 10 o'clock, you do have the Bank of Canada interest rate decision, and that's likely to be a player here that could offer a catalyst for this scalp. So we'll keep this one in our view right as you head into the 10 o'clock hour with the BOC. Questions on yesterday's Aussie Cad setup? And as always, guys, feel free to throw any questions or trade setups on pairs you guys are looking at. I mean, this is just the setups and the sort of trades that I've personally been jumping in and out of, but if you guys have any setups or pairs that you'd like to review, feel free to throw them on the message board. A quick walkthrough on what we're seeing so far as you open up. Things I'm looking at, British pound. You saw this thing try to break through the upper median line parallel. We didn't do it on a closed basis. Here we are today. Again, remember the focus 50.80. Okay, on a closed basis, the low day close so far comes in right at 50.83. 50.83 also exactly happens to be the 88.6 retracement from the advance off the 2013 low. And certainly that near term is going to be our bullish invalidation level. If you see this thing close sub 50.83, sheesh, it's going to be tough days for the pound. There's really not much I have on tap until the median line bisector, which today doesn't come into like 49 basically. And then obviously the lows from that 2013 low comes in at 48.12. So wider range or on a broader view, this thing is definitely, right back at support. We'll continue to eye that 50.80 level, 50.83 as key support for the pound. take a quick look back real quick at what the dollar yen is doing, see if we need to do anything on that. Okay. Okay. We'll keep an eye on this one, guys. Again, the objective here is to get this final stretch here into 17. We're up about 150 pips on it already, so I'm not going to get too aggressive. Our stops, like I said, are just above the 118 handle at this point. We'll see if we can get that final stretch into 117. Listen, if it gets into there and we get out of this position, it's the opening range low for the week. So on a rebound type of play, we'd look for possible reentry back in this same zone, okay, to target at that run a 117 run and below. Remember, the whole benefit of using these intraday levels, guys, is that we can play the same ranges over and over again. So if you had been long on the opening range break early in the week, targets at 118, 118.80. So we played this range again, and then we initiated a short yesterday. So this same 100 pip range yielding 200 pips. And that's the whole benefit of using this near-term strategy. So we want to try to be as dynamic as we can. And near-term, I'm looking for that last stretch into 117. See if we can book the last final third of that position. All right, guys, so that's sort of what I've been focused on. I do want to know if you have any questions or trade setups you'd like to review, any pairs you'd like to look at, feel free to post them now. Petro says, why is nobody talking about the euro anymore? Maybe tomorrow we get a low. We can trade against. What would be the levels should we watch? Or what would be the levels we'd want to watch? Sure. So, yeah, I mean, why would you trade the euro and really stress it? To be honest with you, Petro, for me, the euro I've fallen out of love with it for the last couple of weeks, right? There's just too much chatter. It's too much of a crowded trade. The Swiss debacle really has me scratching my head, and I'm waiting for us to break this godforsaken range, okay? It either needs to be a close and push sub 115.30 or a break back above 116.80. That's what I've been waiting for the last 4 days. We haven't gotten it yet, and until we do, I kind of just want to sit on the sidelines. Momentum is an oversold territory on the daily chart. I'm sure as hell not chasing this on a short, and I'm sure as hell not trying to call a long yet. A 30 break on a close basis here, that's interesting. For me, guys, on a daily chart, a 30 breach to the upside from oversold territory is your classic, typical correction signal. Okay, bring your attention to the one that we saw here in October. Okay, that 30 break finally called the decline of a 3-month-long stretch where we didn't even see an update of more than 1% for the entire 3 months. Okay, there was the trigger with a break above 30. You finally saw this thing give us a little bit of a bounce. Now, even if this pans out into a close of the session, you look to stay super nimble. ECB's on tap next week. It's really going to be very, very precarious for euro positions, guys. There's so much expectations being cooked into the books from what the ECB could or could not do or may not do tomorrow that, for me, Petro, and for most people, it's just better off to stay on the sidelines. Let's just get some clarity. The reason I've been talking about euro, is because there are setups elsewhere that have been playing out magnificently. And for us, guys, it's not about, oh, are you trading the euro or not? It's where's the setup? I don't care if you give me, South African seashells to trade, right? If the trade is there and the levels are there, that's all that matters. So, Petro, it's not anything to do with the euro. It's just that we don't have any clarity yet. And I don't think that the technical setup is really compelling enough for me to take action. So this is sort of what I'm looking at. We're trying to make a break back below that slope line that me and Jamie have been looking at from that June low. And we will have to see. I'm not sure what. We'll have to see what the ECB gives us. But let me jump into the near term and see if we have anything mapped out here. Okay, this is all just slope analysis. So it's the same slope that we were looking at there, guys, from the June decline. You can see actually it's been pretty well. Pretty well. Caught the low there. And here we are testing the that exact June line as resistance. So near term, this could be what, excuse me, lose my voice here, guys. Near term, this could be what's in play. Okay. Excuse me. Guys, so this is what I'll be looking for the euro. It's interesting that you asked that question, Petro, because I do think, yeah, I think you might get something on the ECB as far as price action is concerned on this basis. So I'll be looking for this right off the bat. If we look at the momentum signature, something's happening today that hasn't happened in nearly 2 months. All right, it's a month, basically a month. Here's a break above 70 to overbought condition. The last time you saw that or anything near that was right back here in early January. All right, so a change in behavior, okay, a momentum change in behavior, something that you want to take note of. Since that high and break above 70 in momentum, you've seen 30 break, oversold, 60 hold, 30 break, oversold, messy, but 60 hold, 30 break, oversold, 60 hold. Fake out, 30 break, oversold, 60 hold. 40 hold is the first time that you've seen 40 provide some serious support on a pullback in euro dollar since that high, right? Look where that high came off, 40 hold. So near term, yeah, I think we are starting to make a push. Am I going to be caught flat-footed long the euro into the ECB interest rate decision tomorrow? It'd have to be a pretty compelling signal, and if it is, you'd know that my, A, my stops will be pretty tight, and B, my leverage size will be, less than half of what I would typically be trading. On an interest rate decision, guys, it's not as easy, in my humble opinion, to trade as like an FP, where you get the number stronger, weaker, react. CPI, you get the number stronger, weaker, react, right? Things like this, where we're looking to see what the composition, size, and scope of the QE package will be, I think it might not be that easy to trade. So I'm looking for near-term resistance, 116.50, 117.18, 117.20 is the next level I'm looking at. Also trying to give mind to these trend lines near term. So on that basis, I don't really think there's much here because you don't really have a clear-cut stop. You're already off the lows by too much, but that's sort of the formation and the structure I'll be looking for as we get into tomorrow's ECB interest rate decision. All right, we'll be up and live tomorrow, guys, at 8:30. So get the aftermath, and we'll see what how the market's reacting on the back of that release. So, Petra, I hope that helps as far as what I'm looking at least with the euro right now. I do think you make I think you make a pretty concerted rebound, and you do see a recovery in the euro for sure. But how to play that right now, is there a setup? It's all about the setup, right? The risk on the trade and the opportunity. And I don't think that the broader setup here necessarily has anything from a scalping standpoint, that I'd be interested in. But hope that helps. Petra says, thank you for your patience. It does. Right on. Right on. Sterling yen for Eileen. Can you go over sterling yen? Thanks. Sure. Here's what the sterling yen looks like on the daily, right? So the focus, or what me and Jamie were talking about, is the opportunity for the short side yesterday. Unfortunately, I did not take that trade, and You know, I didn't put it on the scalp levels either because I wasn't really keen on trying to press a short sterling to that magnitude. And I was already short dollar yen. So I didn't want to put you guys on a short dollar yen, short sterling yen, and double that up, because if you had seen the BOJ yesterday do something, you would have gotten spanked on both of them. So I thought it prudent to stick with the dollar yen. That said, here's the formation of the current operative structure that we're in. Okay, it was hairy on this break, and this formation has been really well suited, catching the highs, nice rebound, trigger break on a gap. The break here hasn't really been all that suited. Okay, so it's good that we focused on this one, and it looks like the upper median line parallel held like a charm as you made that rebound. Here's what the sterling yen looks like on the 30-minute. It might be a little bit clearer. Near-term support 176.30, by the way. But pound yen. Okay, so this is that same pitchfork as a shift formation. Okay, and you saw that that grabbed the lows here or caught it. The basic operative one you're looking at on the sterling yen. What am I doing wrong here? Ah, okay. There we go. Okay, that's the operative one that we're working on the daily chart. So at this point, you saw a 70 break from the up, from the top side to the downside. That in and of itself would have been a great trigger with a stop against the highs. You're looking for a move below this 79.70 barrier, and on that type of move, a basic retracement off the lows is probably going to be your best bet. I wouldn't be surprised if we're making it. Okay, we're testing 618 right now. Remember, the weekly opening range low on this now comes in right at 76.95. This is called the 77 handle. And in fact, if we choke this up into a, whoops. Key support range on this one near term, Eileen, that's what I'd be looking at. Okay, opening range low into the 764 retracement. Eileen saying to look for more shorts on sterling yen or wait for another rebound. How far? Yeah, so I wouldn't necessarily be looking to jump into any fresh shorts from here. If anything, on the rebound pull to the upside. Let's do some investigative work, shall we? Maybe we'll keep the top. So here's what I would do. I'd be looking for either a rebound off this level to sell. As far as finding or locating an entry zone for that short, the reason I don't want to use this, I'm just going to show it to you, is because I have no way of confirming or validating that we put in a near-term low. Eileen, once you see this trigger break here, or if we clear 40 on the upside, that's when this retracement, in my mind, starts to hold some water. Right now it doesn't, because I have no way of validating, no way of confirming this low. So for me, this is just what I'm kind of keeping in mind. But on a scenario where you see a trigger break to the upside, a clear reversal in the momentum signature, then we want to tack on that retracement, look to target this 50%, the 618 as entry, and look to move for a run back to the downside again. Does that make sense, Eileen, on this one? Nice healthy range as well. A quarter of the daily ATR is looking at a nice healthy 48 pips per scalp. So certainly, as far as the ranges are concerned, the size of the profit targets per scalp on this one looks pretty good. Looks pretty good. One last thing I want to look at. I don't know why these got removed. is this. So this is the 618 retracement of the rally off the lows that you made back in October. And I really wouldn't stress this 38.2 anymore. Let's get rid of that. Oh, I'm sorry, not 32, the 50. There we go. Eileen says, seems to stop at 117, or excuse me, 177.50 with a short soon from current levels. Talk to me about 77.50, Eileen. What do you see there? I've been seeing it hold below the 6.1. Oh, so you're using, okay, again, yeah, so Eileen, guys, is thinking about this. Eileen's looking at this 618 and saying, hey, as long as we stay below this 1618, can I just take a short, okay, and, try to hold below that level? Chasing, Eileen. She said it herself. Yeah, that's chasing, isn't it? Yep. I mean, for me, and I'm super short term, so even something like that for me is, it's just risky. It's just risky. But you know what? Maybe it's worth a shot. Let's see what the near term, 5 minute, maybe getting a major break in a momentum trigger or something. Okay, but you don't. So right on the 30, or right on the 5 minute chart here for sterling yen, what do you see? Some Eileen here. You see some divergence, price action, new low, lower low, lower low, higher lows. Okay. As far as a trigger, something that'll take us, that's 3 points of reference right there. So you have a trigger for resistance. It's actually not so bad. Resistance, resistance, resistance. Okay. Just want to highlight this comes right into the operative trade as well, right into the operative trigger. So some stuff like this sometimes can hold more water. Yeah, on a scalp basis, I actually wouldn't have too much against that type of position, Eileen. It is chasing, to be honest with you, but with a stop, against that, it would have to be 54, at least that spike high. With a stop that tight, you're looking for 50 pips. Sure, it could work. Not really my style because, again, the broader picture looks like to be making more momentum, and I'm already short dollar yen as we speak. We're up 150 pips on that at this point. So I really don't want to, double up, as it were, on the yen. But certainly, I am looking near-term lower. So you're looking for that move into 76.98, 76.80. Stop against 77.50. Could work. Could work, Eileen. Let's just say this. A lot of those types of intraday trades, guys, you could squeeze out some great positions on them. What I want to do always is take a step back and saying, as per my strategy, does this make sense to me to take this? Yeah, I might be able to squeeze out 20, 30 pips, but on the whole, if I trade with this type of mentality, is that going to be a winning strategy for me? So I just want to caution you, Eileen, jumping into positions like that, sure, sometimes you can make some great, real quick pips, but if you get too comfortable with that type of scenario, sometimes you can really make a real mess of things. So I wouldn't want to say that that's the ideal scalp position I'd be taking. Could this pan out with a stretch into 76.90, 76.83? Sure, as long as you stay below that nice pivot. Sure. It's always still a decision for me. Chase or wait. Yeah, Eileen. Again, specifically on the yen crosses, guys, a lot of the entries have been phenomenal at the oddest times. Like yesterday's dollar yen, I think it was like just ahead of 4 o'clock, the market close. Same thing here on the sterling yen. The ideal scenario here would have been right ahead of the market close here in the United States. Stop against that high on some divergence and momentum. By the way, when you're looking at divergence, guys, one reference point above 70, and one below, these are typically my favorite, or these are typically the strongest reference points. When all is said and done, the closer both divergence points are to 50, the stronger the signal is in general. But when one of the divergence points are in the extreme, meaning above 70 or sub 30, and the other one is on the inside of 70-30, these sometimes can be pretty strong signals as well. And on this trade specifically, if you take it from the low in price, you actually had a pretty decent trigger. That was very late in price, but the trigger would have been a break below 79.50, stop at 180, basically looking at a 60 pip stop. Would have been tight, but that would have been the best trigger I could have seen near term, save the 70 break in and of itself. Like I said, those are sometimes really great triggers as well. And this is 30-minute, guys. So remember, we set up here these triggers on the broader view to see when we're seeing a shift in momentum on the 30-minute chart. But when you're actually looking for entry, go ahead and drill down to a 5-minute chart. Yesterday I posted that dollar yen was a 1-minute chart when I said, hey guys, momentum profile looks to be changing near term. That was actually a 1-minute chart. So try to be as dynamic when you're in the position and adjust that accordingly. But that's my take on sterling yen, Eileen. Hope that helps. Hope that helps. I see a question here from Emil. Wants to look at euro yen, and DB wants to take a look at the DAX. Hey, you know the DAX has actually been a very interesting trade. Eileen says, thanks, that helps. You're more than welcome, Eileen. So I will take a look at euro yen since we're on the yen ski in general. Here's what the euro yen looks like on the daily. All right, let's see what the deal is here. Who is this question for in the euro yen? This was for Emil. Emil, I don't really have a play on it. I'm going to tell you this right now. I can tell you what levels I'm looking at. I can't really say with conviction that I'm actually interested in near-term trading this one. And this is why. You've come into a low that represented a huge level, i.e. the swing lows and the stretch low that you made for 2013. It was also an exact 100% extension from the actual 2013 highs, excuse me. And just above that where we turned was a 2618 off of this December high. Long story short, what I would expect here is to see possibly another run at the lows, check that 134.57, check 134 handle, and then mount a pretty sizable rally. How to play that intraday, I would need much more back and forth action before I can start to put a scalp together on this one. Guys, when trades are stretched like this, you don't want to scalp them. Okay? These are where you want to put on longer medium-term levels, swing trades. This is where Jamie's strategy shines. But when you see a trade that's this stretched, to try to scalp it intradays is tough. Let's drill down and see what the 30-minute looks like. Maybe it'll offer us something. Yeah, it's all those same levels stacked up here. We didn't quite achieve them. Again, I wouldn't be surprised if this thing does make a run into a new low, and then you offer a great opportunity to get on the long side here. That being said, you know, looks like the opening range was set here on a Monday, Tuesday stretch. You're looking for either a break above 137.60 to get the recovery. I'd be looking for 139 in that scenario, or a break below 135. And even on that type of play, I wouldn't be looking much lower than this cluster of support regions down here, 34.12 into 34.50. This is a trade that you want to watch. Definitely, it's, in my personal opinion, it's worth waiting for the ECB tomorrow, for sure. Let's see what they do. Let's see what how aggressive the QE package turns out to be. And on that premise, I think we'll get a little bit more clarity on what the euro crosses are doing. With that said, you know, we're $1.50 on euro on dollar yen still. I don't want to start loading up on yen long positions. And at the same respect, I'm not really keen on pressing euro shorts at this point ahead of ECB with where the euro dollar is trading. So that was a mouthful, but I hope it helps, Emil. I hope it gives you some perspective. And that's okay, guys. I mean, there's not always going to be a setup on every pair. There's not always going to be a setup on your favorite pair. And as you can see, me and Jamie haven't really been too focused on any of the euro crosses as we head into this week. So let's clear out that ECB and see where we can go from there. The momentum signature, to be fair, does look like it's starting to wane as far as the short side is concerned. And this is a perfect example of what we like to use in momentum, guys. Look at the high that we made in late December. That was the last time we saw a 60 break, right? 30 break, keep looking lower. Rally, 60 holds, keep looking lower. 40 break, keep looking lower. Rally, 60 holds, keep looking lower. 40 break, keep looking lower. Rally, 60 breaches. And now 40 breaks. When you see a trade like this, guys, look lateral. Okay? A trade that goes from 60 to 30 to 60 to 30 is your classic range-bound condition, your classic consolidation type of momentum signature. So on that basis, I really don't have a strong opinion from where we are right now in euro-yen. Emil says, thanks a lot. 3 exclamation points. Cheers, Emil. Again, I love when you guys ask a question, I can say, hey, this is what I'm looking at. This is a good opportunity. I don't think we're there quite yet on euro-yen and pound-yen, but we'll definitely keep an eye out. I saw a question earlier here from DB on the DAX. So, my man, the DAX, someone brought this up. I think it might have been Sandy last week. Watch that trigger break, guys, on the 5-minute here for the dollar yen. If this does break to the upside, I'm going to go ahead and jump out of the remainder of this position. We're up about 151 now on that short. But as far as the DAX, it's someone brought this up last week, guys, and we just tacked on a basic quick analysis for it. And it's been pretty ridiculous. Look at this. You guys remember this? Quick pitchfork off the low that we made back in December and also the early low that we made here in January. It gave us this slope. We ran into median line, which happened to coincide with an exact 618 extension off the lows. Let me just show you where that starts from. Right here, okay? And that confluence dead on with the median line. Catching the highs, momentum, 60 break. You're looking for a pullback. Near term, I'd be looking for support right around that 10,090 level, which is not anything. It's not a fib level. It's the simple highs that we made for December. But also, let's take a look at a couple of different things. We want to see what this extension looks like. Highlights 2 things. 100, again at 10,090 like I just noted. And a break above this high, looking for the median line, or looking for the upper target beyond 10,290. You're looking at 10,550 here as the 1618. One last thing you want to always take into account is the basic retracement of that same rally as we turn and look lower. And look where the 236 comes in. Same exact region, 10,074. So all told, guys, sort of these are the major levels I'd be looking at real near term. Let me clean this up just a little bit so it's not so all over the place. Okay, these levels I'd be looking near term for the DAX. You stay constructive above this region near term, DB, so I do think immediately you look possibly a little bit lower. As long as you stay above the lower median line parallel, you continue to favor the long side on the DAX. And obviously tomorrow's ECB interest rate decision does have the propensity to give this thing the next kick that we need. So you're looking for either a breakdown sub that median line parallel to look for a recovery into lower levels sub 990 or 9,900, or you look for that breach above 10,300, and that really opens up further topside objectives initially at 10,550. But near term, I still think the immediate focus here is still going to be lower. Okay, it looks like you just got that trigger break right here. And this is the trigger you'll be looking to put you back on the long. All right. Not a bad setup. Not a bad setup. I was thinking about Sandy, or if you're into room here, Sandy, I was thinking about you when I was looking at this the other day. I just happened across on that chart. See, maybe this offers some support here on the short. DB, hope that helps on the DAX, German 30 indice. Certainly running to a big level of resistance here early in the week. Okay. So, guys, if there are no other questions, if you have any questions, feel free to throw them out. If not, we will pick things up tomorrow morning as the ECB tries to come online. We'll see what they are going to do with that QE package. We'll be up at 8:30 Eastern. Later today, Jamie is going to be on, guys, with his midweek strategy webinar at 1 p.m. Eastern here in New York. So definitely stay tuned and look forward to that. Eileen says, I'm good. Thanks for this morning. Eileen, you're more than welcome. Petro, Jay Jackson, Mark, Matthew, Permendra, Tuttle, Adris, Arif. Can't go through everyone, but Chris, DB, I got through as many as I can. Have a great session, and we will pick things up. Look, as far as the dollar yen is concerned, guys, for those of you who are still in that one with me, I'm just going to watch this trigger. Honestly, if it gives up to the upside, we'll close out the last third of the trade. That'll give us about 140 pips or whatever. We'll look for re-entry, and that's how we want to play these. These are great opportunities in the dollar yen, which typically is not going to be my favorite setup, still looks pretty clean. So as long as we hold within this formation, we'll look for re-entry possibly near 117.75 or on a more aggressive approach, 118. But this is going to remain our near-term bearish invalidation level. So we'll look to see how this opens the session in just a few minutes. Till then, guys, best of luck trading, and we'll see you tomorrow. Don't forget Jamie's webinar at 1 o'clock Eastern in New York. Yalla, cheers.